Yeah, it's very important to note here that we've got a refutal from Shell after some of these big headlines hitting the wire here recently. I think there's the way to look at it, I think, is that there's huge hurdles here for a full takeover for Shell taking over BP. There's antitrust issues. There'd be years-long synergy realization challenges, cultural integration. So I really think that a full takeover is highly unlikely. It's a big ticket item, even for a company as big as Shell. What we think is probably more likely is there's some truth in the middle here to M&A interests. A possible business unit of BP's could be very valuable to Shell. Let's keep in mind that BP's valuation has been under significant pressure here. So one of its issues is that its sum of the parts is much higher than where it's currently valued. This makes a potential divestment of one of its units much more attractive to management.
Hey, well, what units? What part might be, the company willing to part with? What will investors like? And what parts maybe it doesn't want to make sure that there's a BP that's kind of left?
Yeah, so I think starting off, what wouldn't it be interested in? I think Shell has been very good at reading the investor room on partly why BP has faced the difficulties it has. We think it'd be very unlikely for Shell to be interested in BP Lightsource, which is BP's solar unit, their offshore wind, their hydrogen, their EV charging. All these will be highly likely off the table. We think Shell will be mostly interested in their core oil and gas engines, something like BPX, which is BP's onshore shale business in the US, which has done very well. BP's Gulf of Mexico portfolio, there's a lot of synergies here, overlap with some of Shell's assets. And of course, BP's LNG business, it's about half the size of Shell's, but acquiring this would make Shell just the absolute dominant global LNG player, controlling nearly a quarter of the global LNG market. So I think it's probably back to basics if you're looking at potential acquisitions of BP's units.
Two global companies based in different countries. From a regulatory perspective, what do investors need to understand about potential hurdles here from a regulatory environment?
I think antitrust hurdles is probably the number one risk to why this deal has not happened, in years prior. There is major overlap, particularly on the fuel retail side. Countries will not like BP plus Shell retail operations controlling a significant, or perhaps in some situations, all of their fuel marketing supply within the countries. I think this is a major risk, and I flagged it many times before. I think there's a lot of desire, particularly on the banking side, for a deal of this size.
Yeah.
But that brings a lot of complexity and challenges as well with it, which is why I ultimately think it won't happen on a 100% full takeover basis.
Will, is there anything that we can take away from the ExxonMobil get together that would tell us what might happen here, especially on the regulatory front?
Yeah, I think the difference there is it was a American. I think these portfolios are just much more diverse now. There's so many different components, different business units. I just think the overall ability for these portfolios to fit together is much more challenging on a whole one-to-one basis.
Okay, interesting to hear that. If we wouldn't necessarily see this matchup happen, Royal Dutch Shell taking over BP, who are the other players we need to keep in mind when it comes to possible M&A within the space?
So there's been a few rumors flying around. Obviously, Exxon and Chevron. You could even see some interest from Mideast NOCs like ADNOC. So there are potential buyers out there. I do think that the BP is ultimately interested in surviving. So I think the most likely option here is going to be them carving off a piece of a business. We know that they put up their Castrol business for sale. It's their lubricants, which is highly profitable, but it's ultimately non-core to the overall strategy. I think going back to that sum of the parts issue that they do have an attractive portfolio. It's just when you add it up, it's just much less than where it's valued now. I think also we're going to see some more management change. We already know the chairman, Helge Lund, is on his way out next year. There's major changes afoot, and a lot of this is due to Elliott Management, the activist shareholder, building up a 5% shareholding in BP, and has been reportedly very unhappy with inadequate changes being made to the strategy and the portfolio in recent months.